Hi, I'm Ian Linklip, the Consumer Insider. For 25 years, I've been representing consumers in disputes with car dealers, debt collectors, and credit reporting agencies. Every week, I bring you the inside scoop on how it is that you can use the consumer protection laws to fight back against bad businesses and be heard as a consumer. Today, I wanted to talk to you about a question that we get in my office all the time, which is, can I sue a bank or a finance company or a debt collector for ruining my credit with false information? So the short answer to this is yes. Yes, we can bring a lawsuit for something like that, and you can too as a consumer. But there's some limitations on that, and today I wanted to share with you the 4 things that we look for every time that a consumer comes to our office and is having a problem with false information on their credit report. And these are the requirements of the statute, and that statute is the Fair Credit Reporting Act. And so the first thing that we're always looking for is something that we call an objective inaccuracy. And an objective inaccuracy, we use a common sense test really in our office, which is, can we explain this to a jury in 15 seconds or less what it is that is wrong with this item on the credit report? So an easy example would be something like an identity theft item. So we could say to the jury, hey, this item was the result of an identity theft. Mr. Smith was a victim of that identity theft and never agreed to be responsible for this account. Therefore, this item is not true. This is inaccurate, and it shouldn't be on Mr. Smith's credit report. Well, that's an easy example. Some other examples, somebody else's account. There may be an account that belongs to your wife, to a relative, to somebody who you know, who you've had a joint account with in the past. It could be that the account was closed, paid off, discharged in a bankruptcy, settled or compromised with a debt collector. Any of these things that indicate that the account should not be reporting on your credit report, those would be inaccuracies, objective inaccuracies that we could explain very easily to a jury, and there wouldn't be required any long or lengthy explanation about why this item shouldn't be on the report. And that's the first thing that we look for. It's the first question that we ask when somebody contacts our office asking for help with a credit report. The second thing that we're looking for is we're looking for a dispute letter to the credit reporting agencies. So those dispute letters, frequently we see consumers, and we see even other lawyers who don't work in consumer protection law, doing the wrong thing, and they're sending these dispute letters directly to a finance company or bank that's been providing the data up to the credit reporting agencies, but they haven't sent a copy of this letter to the credit reporting agencies that's got the data on your credit report. And unfortunately, the statute says you cannot bring a lawsuit against somebody that is furnishing data up to a credit reporting agency unless you've tendered your dispute to that credit reporting agency. So what that means is your letter directly to the bank or directly to the finance company, yeah, that's good that you sent that letter and they should be investigating that, but that's not going to get you ready to take the next step if they don't take it off your report. And that next step is the lawsuit. That's really the only remedy that the statute provides after you've made your dispute and they've refused to take it off. And if you have not tendered that letter to the credit reporting agency, to the credit bureaus, you're going to have to start all over again, and you're going to have to send that letter there. So we're looking for that, and if you need those dispute letters are on our website. We've got samples on our resources page at consumerlawyers.com. You can use those sample letters. They have the addresses for the bureaus in them already. They're in MS Word format. All you have to do is fill out your name and fill out the reason why it is that item is wrong. We also have an ebook on the website that explains to you how to write that letter. But the most important part is it's got to go to the credit reporting agencies and identify the item that's wrong with it and why it's wrong. So that's the second thing we're looking for, is a good dispute letter to the credit bureaus. The third thing that we're looking for is a verification of the false information. And what that means is that the Fair Credit Reporting Act does not allow you to bring the lawsuit against the furnisher of this data, the bank, the finance company, the debt collector, until there's been a verification. And the way the statute describes this is that the statute requires that the furnisher have conducted an unreasonable investigation into the dispute. So that unreasonable investigation arises after they verify the information that's false. So that's what we're looking for. And you will know this when you get a response from the credit reporting agency, because that response should include the results of the credit reporting agency's investigation, which includes the response from the furnisher of the data, the bank, the finance company, the debt collector. And it will say on it, Dear Mr. Smith, you have disputed the ABC Bank's item about you. They have verified it, or they have deleted it, or they have modified it. So when we see that in our office, we're looking for that modification or that verification. And in the modification, they can change that reporting in a number of ways, but we're looking to see whether or not that item remains on the report. And if it remains on the report and it's subjectively inaccurate, then we're ready for that next and final step, which is that we're going to look for some form of damage. And usually that damage is a credit denial, or it can be an increase in the cost of credit, or a revocation of credit, or a revocation of a job, a security clearance, insurance. Any way that you've been harmed by the publication of this false information after you've made your dispute. Now, a lot of people will come to our office and they will have no credit denials, and they will not have even applied for credit or a job based on the fact that they think that the credit bureaus are going to publish this information and they're going to be embarrassed by it or humiliated. And we tell the consumers the same thing every time, which is, if you think that you are entitled to credit and you want the credit, or you would find it convenient for the credit, don't let the fact that somebody is going to lie about you deter you or stop you from asking for that credit. If you need a mortgage, go try and get that mortgage. If you were looking for the mortgage before you wrote your dispute, keep looking for that mortgage afterwards. If you were looking for a car loan before, keep looking for the car loan afterwards. Again, don't let what the bureau is going to do change your mind, because in reality, you don't know what could happen when you put that application in. Credit bureaus delete information all the time, and you don't know whether or not that item will still be on your report even after you have been rejected for your dispute. More importantly, you don't know what that creditor is going to do. They may look at that and say, it doesn't bother us, and they may go ahead and decide to give you credit. Or they could ask you about the item on the report, and they could ask you, hey, why is this charge-off item on your report? And you could offer an explanation. You could even provide that explanation before you ask for credit, and that is a statutorily permissible thing to do. You could provide that information beforehand, say, hey, look, I was a victim of identity theft. Here's my ID theft file. Here's the police report. Here's the affidavit. Please don't look at the following accounts which arose from that identity theft. So if you provide that, maybe that the creditor looks at the credit report and says, we're just going to disregard that false information. We'll only look at the credit that's actually yours. And they could give you the credit. So you don't want to be inhibited. You don't want to stop looking for credit that you would ordinarily get. And if you've been denied credit based on an objective inaccuracy that's been disputed and verified, then chances are pretty good that you may be ready for the next step. And any attorney who is going to look at a case is going to look for these same four things if they're looking at bringing a lawsuit against a furnisher of bad credit data. So that's it for today. I've got more information about all of these topics on my website. We're going to do more podcasts on each of these four elements because there's a lot more to say about them. But that's a pretty good summary of what you need to know about what you need in order to be ready to take that next step against a furnisher. You need an objective inaccuracy. You need a dispute to the credit reporting agencies. You need a verification, and you're going to need some form of damage. That's it for today. I'm the Consumer Insider. If you thought this video helped, pay it forward. Hit the like button below, leave a comment, and if you know somebody who could benefit from this video, share it with them. Let them know so that they can take this information and go forward. I'm Ian Linklip. You can find me on the web at www.consumerlawyers.com. Our Twitter handle is MIConsumerLaw, and our Facebook site is Michigan Consumer Law Center. If you have a question that you'd like me to address on the podcast, you want me to talk about something, you'd like me to answer anything about consumer law, I'll do my best. You can send it to podcast@consumerlawyers.com, and I'll do my best to answer any questions that you send. That's it for today. I'm Ian Linklip. Thanks.